Copy Trade.
WeMasterTrade an auto and crowd rate with indifferent people of as white angel because trader we invest in them, we white them, we help them scale their potential into real consistent profit. Think about it as your trading partner, the silent force behind your chart, trades, and your growth.
And the best part, we take the risk so you can focus on what you do best, trading smart. No pressures of losing your own capital, no more emotional trading due to fear of personal loss. With WeMasterTrade, you are finally free to trade with clarity, control, and confidence. And guess what? You still get to keep up to 90% of the profits. Sound, sounds like a dream? It's not, it's our motto.
So our mission is quite simple but powerful, to empower serious skilled traders with capital, tools and a community so they can thrive in the global market. And we are building more than just a platform, we are building a platform that recognizes you, the trader, as the assets worth investing in.
It doesn't matter where you come from, your background, your budget, and your story. If you got a discipline, strategy, and the mindset to grow, you got the capital and for your journey.
So if you're ready to stop trading small and start thinking big, welcome to WeMasterTrade, where your talent meets our trust. Let's make trading your full-time future.
So before we dive deeper into how everything works here, so let's take a quick moment to introduce ourselves, because behind every great firm there's a great teams of real traders, real people and real passions.
Hi everyone, I'm Helen, a full-time trader, former finance analyst and now passionate mentor here at WeMasterTrade. I've been in the market for over 2 years and I've seen it all, the wins, the losses, or the late night chart session. What allows more? Help a trader finally break through in that selling, the one where capital always seems like the enemy. As WeMasterTrade, I get to flip a narrative. We become the war at your back.
And I'm Ralph, swing trader, risk management get, and honestly, your go-to high woman when the market gets rough. I started just like many of you, demo accounts, blowing small accounts, learning the hard way, but eventually I found consistencies. And the truth is, it came down to two things, discipline and backing. Now I get to work with WeMasterTrade and support traders like you to reach that level faster without going broke in the process.
So, and I'm your MC, but more than that, I am your connector, here to guide you through the WeMasterTrade ecosystem. So I might not be the one on charts all day, but I've spent years building brands, platforms and communities so that empower creators and traders to shine. So trust me when I say what you're about to discover with WeMasterTrade could change the way you trade forever. Okay, so that you met our team, so let's explore how WeMasterTrade empowers traders like you to reach new highs. Our process is designed to be quite straightforward, supportive, and most importantly, aligned with your process.
As WeMasterTrade, we understand that every trader journey is unique. That's why we offer two distinct funding pathways to cater the different experience level and growth. For the ones who want a challenge package, ideal for those who perfect the structure and relation to showcase their trading skill. The instant funding package is perfect for the experienced trader seeking immediate access to capital without undergoing the challenge phase.
Let's start with the challenge package. This pathway is tailored for traders who want to demonstrate their proficiency through a structured evaluations, and here's how it works. Phase 1 Trading Skill Assessment. Aim to achieve an 8% profit target while adhering to our risk management guideline. This phase evaluates your ability to generate profits and manage risk effectively in a simulated environment. Phase 2 Stability Assessment. Strive for a 6% profit target, focusing on consistency and disciplined trading practices. Successful completion of this phase showcases your readiness to manage a funding account responsibly. Even passing both phases, you will be granted access to our capital, allowing you to trade with real funds and share in the profits.
For those seeking a more direct growth, our instant funded package offers immediate access to trading capital. This option is designed for traders who have a proven track record and with bypass the evaluation process. A key feature include immediate access to capital, starting with amount ranging from the $10,000 to the $200,000. Profit sharing. Enjoy a profit split up to 90%, rewarding your trading expertise. Flexibility. No restriction on trading style. Allow you to utilize strategies such as scalping, day trading, or using the expert advisor. This package empowers you to leverage your skill and experience without delay.
So regardless of the path that you choose, our commitment remains the same, to provide you with the resources, support and opportunities needed to access in the trading world. But how do we ensure a seamless and efficient trading experience? So let's talk about our cutting-edge trading platform.
At WeMasterTrade, we prioritize providing you with top-tier trading platforms that cater to both novice and experienced traders. Our offering includes all-in-one platform, a user-friendly web-based system that allows you to manage accounts, place trades, and monitor performance seamlessly. Integrated educational resources to enhance your trading knowledge as you go. The next thing is a planned trading platform, which is Platform MT5, designed for active and professional traders seeking advanced tools and customizations. Features include multiple trading tools, indicators, and enhanced control over orders, available for download on Windows, macOS, Android, and iOS devices, ensuring you can trade on the go. These platforms are engineered to provide a robust and flexible trading environment, enabling you to execute your strategy effectively.
Beyond technology, we believe in the power of community and continued learning. As part of the WeMasterTrade family, you have access to educational courses, a comprehensive program covering various aspects of trading, suitable for all experience levels, a mentorship program gathered from seasoned traders to help refine your strategy and decision-making processes, community engagement, opportunity to connect to fellow traders, share insight, and grow together. Our goal to foster the environment where you can thrive and achieve consistent success.
So transparency and trust are the cornerstones of our operations. So WeMasterTrade is a fully registered company holding an official MSB license in the United States and complying with international security regulations. So our credibility is further enhanced by multiple industry awards and recognizing it as a leader in the prop trading space. So but just don't take our word for it. So let's hear from our traders who have experienced success with WeMasterTrade.
Absolutely, our trader success stories speak volumes about the opportunities and support we provide. For instance, many have praised our instant funding process, highlighting how it has enabled them to trade larger positions without risking personal capital. Others have emphasized our transparent profit sharing model and the flexibility to employ various trading strategies without restrictions. This testimonial underscores our dedication to empowering traders and fostering a community of trust and mutual growth.
So in summary, WeMasterTrade offers a comprehensive ecosystem designed to support traders at every stage of their journey. So whether you are looking for to prove your skills through our challenge package or seeking immediate capital via our instant funding package, we provide the tools, platform and community to help you succeed. So ready to evaluate your trading career? Join us as we WeMasterTrade before where your talent meets our trust, and let's embark on this journey together and achieve new highs in the trading world. So now that we have discovered how WeMasterTrade operates, so let's next dive into the standard features that make our platform the go-to choice worldwide. So Helen, why don't you kick things up?
Absolutely. One of the most compelling aspects of WeMasterTrade is our instant funding options. Unlike traditional broker firms that require lengthy allocation, we provide traders with immediate access to capital. This means you can start with a virtual fund ranging from 10,000 to 200,000 with buying power up to 1 million right away.
And let's not forget about our profit sharing models. At WeMasterTrade, we believe in rewarding our strategies generously. You can earn a profit share starting at 50% of your first payout, increasing to 75% on your second, and reaching up to 90% from your third payout onwards. This structure ensures that as you continue to succeed, you reap more of the reward.
Okay, so that is impressive. So, Helen, can you tell us about the diverse range of tradable instruments available on our platform?
Certainly, WeMasterTrade offers a wide array of financial instruments to cater to various trading preferences. Our traders have access to forex pairs like major, minor, or exotic currency pair, energies like commodity like crude oil and natural gas. In these major global indices representing different markets. A stock like share from leading companies across various sectors. This diversity allows traders to explore multiple markets and diversify their trading strategy.
Speaking of strategies, our platform is designed to accommodate various trading styles. Whether you are into scalping, day trading, or using expert advisor, which is EA, we've got your cover. Plus, we allow new trading and offer unlimited contract sizes, providing the flexibility you need to implement your preferred strategy effectively.
So flexibility is key in trading. So Helen, can you elaborate on the educational resources we offer to support our traders?
Of course, as WeMasterTrade, we understand that continued learning is vital for trading success. That's why we actively the WeMasterTrade Academy, offering comprehensive educational resources, including trading course, cover the fundamental and technical analysis, risk management, and trading psychology. Platform tutorial, helping traders master the use of our advanced trading platform, and webinar and seminar featuring industry experts sharing insight and strategy. Our academy is designed to empower traders with the knowledge and skill needed to excel in the market.
And let's not overlook our daily payouts features. WeMasterTrade ensure that traders can request profit withdrawal daily with an average of payout time of just 48 hours. This means you won't have to wait long to enjoy the fruits of your trading efforts.
So, quick and reliable payouts are indeed a game changer. So, Helen, could you shed some light on the scale plan that we currently offer?
Certainly, Agent. Our scale plan is designed to reward consistency performance as you demonstrate steady profitability and adhere to risk management rules. We offer the opportunity to increase your account size. This means accept a larger capital allocation, allow you to scale your trading operation and potential profit over time.
And to support your trading journey, we provide a user-friendly trading platform equipped with real-time data and advanced tools. This ensures you have a seamless and efficient trading experience, whether you are a novice or an experienced trader.
So to sum it up, WeMasterTrade combines instant funding, generous profit sharing, and a diverse range of tradable instruments, so flexible trading conditions, comprehensive educational resources, prompt payout, and opportunities for growth. So it's like a platform designed by traders for traders, aiming to provide everything you need to succeed in the financial markets.
Exactly. Whether you're just starting out or looking to take your trading to the next level, WeMasterTrade is here to support your journey every step of the way.
Alright, so this is where magic is about to happen. So we talked about the packages and how you can jumpstart your journey with WeMasterTrade. So, but let's be real, success in trading isn't just about the package that you choose. It's also about understanding and sticking to rules. So the conditions that were set here at WeMasterTrade are designed to not only keep you safe but also help you grow and take your strategy to the next level. And now, whether you're just getting started or you have years of experience, these conditions will act as your roadmap. So let's dive into the rules that define our trading environment. Because if you understand the rules, you can master the game. Also, first on the list, and arguably one of the most important, is the daily limit. So, Rob, I've seen here that you've been through it all, the high, the low. So, can you kick things up by explaining to everyone how this daily limit works and why it's so crucial for managing risk?
Absolutely, Aiden. The daily loss limit is one of the most essential protections any trader can employ. It serves as a daily circuit breaker to prevent you from suffering significant losses on a challenging day. The concept is straightforward. There is a limit to how much you can lose in a single day of trading, and is determined by the greater of two values, your account balance or your equity at the beginning of the day. So let me break it down with an example so everyone understands it clearly. Example number one, let's say you got a balance of $105,000, but due to some overtrade, your equity including floating profit and loss is $107,000 at the start of the day. If you're working with a 4% daily loss limit, that means you can lose up to $4,000. If your equity performs below $103,000, you are done trading for the day. And for the next example, on the flip side, if your balance is 100,000 and your equity is 99,000, the same 4% loss limit would mean your account would be liquidated if your equity dips below 96,000. The point is the daily loss limit is that to make sure a bad day doesn't wipe you out completely. It's about protecting your account and giving you the chance to regroup and come back stronger the next day.
So, Garlic says like an insurance policy with your trading day. You hit the limit and boom, other things get out of hand. But what happens if a trader accidentally crosses that line? Can they keep trading?
Great question, Aiden. No, if you break the daily loss limit, your account is automatically liquidated, or your open position will be closed and you won't able to trade again, or unless you buy a new trading package. Here's the thing, the liquidation is automatic and immediate. It is designed to prevent further losses. But here's a word of caution. Market fluctuation can sometimes cause you to lose a bit more than the limit, depending on how the farm market is moving.
So, it's a hot start, definitely something traders should keep an eye on to avoid. So, it seems here that we have understand what the daily loss limit is and what happens when it hits. So, the next question is how to avoid hitting that limit in the first place. So, how long have you been in the trading trenches for years? Can you share some practical strategies that traders can use to stay within their daily loss limit? We're all ears.
You got it, Aiden. Staying within the daily loss limits is all about being disciplined and following a solid risk management plan. Here are a few key strategies that have worked wonder for me and Scarlett or the trader. The first, and I can spread this over you a stop loss. I know it sounds simple, but it's absolutely core. The stop loss sure that it market move against you. You out of the trade before things get out of hand. Think of it as your safety net.
So that's like setting up guardrails on a mountain road, right? It's set to stop you before you go off the cliff.
Exactly, Aiden. It's that extra layer of protection. Now the second strategy is position sizing. This is where a lot of traders labor. You should never risk too much on a single trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go away, you're still far from hit your daily loss limit and you can keep trading without any major setback.
So it's like building your defense. You don't put everything in one play, right? You spread out the risk. Oh, that actually makes sense. But what about those moments when traders feel tempted to chase after the losses? Trying to get it all back in one trade.
That's the big one, Aiden. Chasing losses is one of the biggest mistakes traders make, especially newer ones. This brings me to my third strategy: don't chase losses. If you have a tough day, take a step back. The markets will always be there tomorrow. If you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you hit that daily loss limit and you're out for the day.
So true, it's like trying to sprint when you're ready one day, you're more likely to make a mistake. Now, these strategies sound spot on, but how do traders stay mentally strong when things aren't going their way? What keeps them from falling into that emotional trap of chasing losses?
It's not about mindset, Aiden. Trading is just as a mental game as it's a number game. You got to stay calm and focused. One trick is to always have a trading plan before you even play your trade. That's why when the thing gets tough, you stick to the plan and avoid making impulsive moves. And if you find yourself getting emotional, just stop, take a break, step away from screen and reset your mindset.
So, thank you, Helen, for those incredible tips on managing daily loss. Now let's shift our focus to another critical element of risk management, the maximum loss limit. So, this limit is like a long-term safety net, ensuring that you don't deplete your account over time. So, unlike the daily loss limit, which resets at the end of each day, the maximum loss is cumulative. So, when you reach it, your account will be locked and your trades will be closed. So to dive deeper into this, let's discuss how the maximum loss limit works, how it's calculated, and why it's essential for traders at every level. Whether you're a new trader looking to minimize risk or an experienced trader scaling your strategy, this limit ensures that you don't go beyond a point of no return. So, Helen, I know you've got some great insights into the mechanics of the maximum loss limit. So, could you walk us through how this rule works and what traders need to keep in mind as they plan their trading strategies?
Of course, Aiden, the maximum loss limit is a virtual rule that's often overlooked but extremely important. Essentially, it's there to prevent traders from experiencing catastrophic losses by capping how much you can lose for the life of your trading account. Let's break it down. The maximum loss limit ensures your account equity never falls below 94.7 of its initial balance. So, if you start with a balance of 50,000, your account will be close when your equity falls to 47,000. That is total allowable loss of the 3,000. However, it's not or bad news. If you start making profit, the limits adapt, giving you more breathing room as your equity grows. For example, if your account balance increased to the 52,000, you now make the 2,000 in profit. Your new maximum loss could then allow you to lose up to 5,000, as you essentially locking in those gains. The maximum loss acts as a long-term safeguard. It's designed not only to protect your account but also to encourage disciplined trading by setting boundaries. The goal is to ensure you don't dig yourself into a hole that's too deep to recover from. Here are some few specific examples. For the first one, let's say your account balance starts at 50,000, but your equity dropped to the 49,000 due to some market losses. Are you allowed to lose an order the 2,000 before your account hit the trigger the 47,000 threshold and it automatically close? For the next case, now if you're doing well and your equity rise to the 51,000, you got some extra cushion. At this point, you're allowed to lose up to the 4,000 before your account hit the same the 47,000 limit. The calculation to figure out where you stand, the maximum loss limit is calculated by adding the sum of your closed position and factoring any open position that's active running. Your trading dashboard will show two key metrics: the mark permits losses, which is how much you allow to lose overall, and remaining losses, which is the loss left before your account is closed. And now, what happens if you hit that limit? Well, unfortunately, if your equity hits the maximum loss limit, the system will automatically close your account for the day. All your open position will be liquidated, whether they are profitable or not, and you will unable to trade for the rest of the day. To resume trading, you would need to purchase a new trading package.
So thanks, Helen. That definitely helps clarify the nuts and bolts of the maximum loss limit. So it's like the safety above, isn't it? It's there to keep you from spiraling out of control, especially when the markets get volatile. Now, I imagine these rules impact different trades in different ways, whether you are a cautious trader looking to keep the risk low or a more aggressive trader trying to maximize profit. This limit is one of those things you can't afford to ignore. So let's bring in Ralph, our risk management expert. So Ralph, what do you think are the most common mistakes traders make when it comes to managing the maximum loss limit? And more importantly, what strategies can traders implement to ensure they never get too close to it?
Great question, Zayden. You are absolutely right. No matter what type of trader you are, ignoring the maximum loss limit can be costly. In fact, it's one of those things that sneak up on traders who aren't paying attention to the long-term pictures. And I would say the most common mistake is underestimating how quickly cumulative losses can add up over multiple trades. Here are some key strategies I recommend to stay well within your maximum loss limit. First of all, set stop loss order on every trade. This is your first line of defense. Setting a stop loss means you are deciding in advance how much you are willing to lose on a particular trade. The system will automatically close your trade if it hits that number, which protects you from letting a losing trade get out of hand. For example, if you're only willing to lose $500 on a particular trade, you set that as your stop loss and you won't have to worry about it spiraling.
So I love that, so putting a safety belt on each trade. Once you look at that stop loss, it's out of your hands.
Exactly, and it's all about discipline. The next one is manage your position sizing. This is the big one. Often traders, especially new ones, get carried away by putting too much capital into a single trade. But when you risk too much, you also risk losing a larger percentage of your account if the trade goes south. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on any single trade. For example, if your account balance is $50,000, you should only risk around $500 to $1,000 per trade. This keeps your potential losses manageable and well within your limits.
So that makes total sense. You're putting all of your eggs in one basket, and it gives you more room to breathe, right?
Exactly, it's all about spreading the risk so you don't take too big of a hit on any one trade. The next one is monitor your account equity regularly. This might sound basic, but it's incredibly important to keep an eye on your account equity throughout the day. It's easy to get caught up in the market highs and lows, but you should always be aware of how close you are to your maximum loss limit. Your dashboard makes it easy to check your remaining loss, so use it. If you see that you're getting close to the limit, it's time to take a step back and re-evaluate your strategies.
So it's almost like watching a field guide, so you don't want to be driving on things without knowing it.
Exactly, and no one wants to get stuck on the side of the road. Next is create and stick to a trading plan. Having a well thought out trading plan is one of the most powerful tools in a trader's arsenal. This plan should outline not only your profit goals, but also your risk management rules. For example, if you have a few losing trades in a row, does your plan tell you to take a break, reassess, or change your strategies? The idea is to have a preset series of rules so you don't make impulsive decisions in the heat of the moment.
So it's like having a roadmap where you know where you're going, and you have the contingency plans for when things don't go as expected.
That's right, the market can be unpredictable, but a solid plan keeps you grounded. Next is to regularly review and adjust your strategies. Even the best laid plans need to be reviewed and tweaked from time to time. If you find that you are approaching your maximum loss limit too often, it may be a sign that your risk management strategies needs adjusting. Maybe you need to tighten your stop losses or reduce your trade sizes. The key is to stay flexible and adapt to changing market conditions while always keeping your risk in check.
So that's great advice, Rav. It's all about constant improvement. You can't just sit and forget it. You've got to be ready to adjust based on your results and the market.
Absolutely, trading is dynamic and your strategy should be too.
Thank you for the fantastic breakdown of the maximum loss limit, Helen and Rav. So next up we are going to enter a short break, and after that we're going to continue exploring the perfect consistency rule, with consistency rules and the promotion plans that we're currently running.
Trade. copy trade. Copy trade. Copy trade.
So next up we are going to enter our next key topic, the profit consistency rule. So this rule is critical for ensuring long-term sustainable success in trading, as it helps measure and maintain consistency in your profit. So now, to give us a clear picture of how the profit consistency works and why it's important, let's turn to Helen. So Helen, can you break down the rules for us, how it is calculated and why it is important for traders to focus on their consistency rather than just aiming for big wins?
Of course, Then the profit consistency rule is a powerful metric that helps you improve your profit over time. It's not just about making big gains on one or two good days. It's about being consistent day in and day out. So here how the profit consistency rule is calculated. You take your highest single day profit and divide it by the total of your profits and losses over a given period, usually a month or a quarter. And you then express that result as percentage. Let's go through an example. Say your bad day brought in the 200 in profit, but over the month your profit, total profit and losses add up to the 410. In that case, your profit consistency ratio could be about 48.7%. This ratio shows how much your performance comes from one standout day. Ideally, you want this percentage to be lower under 20% because that means your profits are more evenly spread out across all your trading day. And now, why it is important? A low profit consistency ratio indicated that you're not just rely on a couple of big wins to stay profitable. Instead, you're showing that your strategy works consistently over time, even on a dull day when the market even gives you a big win. This kind of consistency is the hallmark of a successful long-term trader.
So that's a great explanation, Alan. So just to clarify, a low ratio means that you're more likely to make steady gains rather than being overly dependent on a few good days, right?
Exactly, Aiden. When you're too reliant on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through long stretches where you're not making much money or even losing it. But if your profit consistency ratio is low, it shows that your performance is moderate and that your trading is more predictable and stable over time.
Oh, that is incredibly insightful, and it seems like a critical metric for any trader who's serious about long-term success, right?
Exactly, consistency is the key to sustainable profitability. Big wins are great, but if they are followed by big losses or long period of break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
So now that we've got a solid understanding of what the profit consistency rule is, and let's dig into some practical strategy to help traders maintain a low ratio, easily under 20%. So, Ralph, I know that you've got some great tips for us. Can you walk us through how, some techniques that traders can use to stay consistent and, help their ratio stay in check?
Absolutely, Aiden. The profit consistency ratio is a powerful indicator, but it takes careful management to keep it low. So let's talk about some practical ways traders can improve their consistency and avoid becoming too dependent on those rare big wins. One of the most effective trade strategies to keep your profit consistency ratio low is to diversify your trades. This means spreading your investment across different markets, asset classes, or even trading strategies. If you only trade one market, say forex or stock, you risk being too reliant on that market performance. By diversifying, you reduce the impact of any single loss and create more stability in your overall performance.
So that makes a lot of sense. So if I'm only trading in, let's say, the US stock market, a bad week could really hit my consistency hard. But by adding trades in, for example, commodities or forex, I could balance all of that risk, right?
Exactly, Eden. It's all about balance. When one market is performing well, another market might be doing better. This way, your overall performance stays smoother and you are not relying on just one or two trades to pull you through. Next up is position sizing. One of the biggest mistakes traders make is over-leveraging, taking on positions that are too large relative to their account balance. For example, if you have a $10,000 account, putting $5,000 into a single trade is risky because if that trade goes south, you could lose a significant portion of your capital. Instead, aim to keep your position sizes small and manageable, say no more than 1 to 2% of your account balance per trade. This reduces your risk and help ensure that losses don't overwhelm your profit.
Right, so not just about picking the right trades, but also making sure you're not putting too much of your capital at risk on any single trade. So smaller, more controlled trades lead to steadier results over time, right?
Exactly, by managing position sizing, you prevent any single trade from having too much impact on your overall performance. It's all about control. Another crucial element is having a well-defined trading plan. Without a plan, it's easy to get caught up in the emotion of trading, whether that's the assignment of a potential win or the panic of a sudden loss. A solid plan outlines exactly when you will enter a trade, when you will exit, and how much risk you are willing to take. Having these rules in place keeps you grounded and helps ensure that your trading decisions are consistent, which in turn help keep your profit consistency ratio in check.
So that's a really good point. A lot of traders, especially new ones, probably jump into trades without a solid plan and making emotional decisions, right?
Absolutely, Aiden. It's so easy to get emotional in the heat of the moment, but if you have a plan, it's much easier to stay disciplined and avoid impulsive trading that could hurt your performance. This brings us up to stop loss orders. A stop loss is an automatic access that you set up to close a trade if it moves against you. This helps to cap your losses on any single trade and protect your account balance. By using stop loss order, you can avoid the catastrophic losses that can throw up your profit consistency.
So I like the ideas of using stop loss orders as only the way to take the emotion out of the decision-making process.
Exactly, it's like setting up a safety net. When your stop loss is in play, you don't have to worry about watching trade 24/7. It goes out, the stop loss take you out of the trade automatically, helping you stick your plan and avoid large, unexpected losses. Another important strategy is to regularly review your performance. Just because you set up a solid plan and strategy doesn't mean you should put everything on autopilot. It's crucial to track your trades, see what's working, and make adjustments as needed. You might find that certain market or strategy are delivering more consistent results than others. By keeping a close eye on your performance, you can track your approach and improve your consistency over time.
So it's like performing maintenance on your trading strategy, always looking for ways to optimize and improve.
Exactly, just like a car needs regular tune-ups, your trading plans does too. Continuous improvement is key to keeping your profit steady. Finally, and this is a big one, avoid emotional trading. Whether it's fear after a loss or overconfidence after a win, emotion can lead to poor decision making. If you stick to your strategies and avoid chasing losses or getting overly excited after a good day, you see much more consistent results.
So that's such an important point, staying calm and disciplined even when the market is going crazy. But it is easier said than done though, right?
It's definitely take practice, but staying level-headed is crucial for long-term success. If you can control your emotion and stick to your plan, you'll be far more likely to maintain consistent profits.
So next up we are going to dive into another crucial aspect of effective trading, the risk consistency rule. So this rule is key to maintaining both stability and long-term probability in your trading account. So Alan, I know that you've got a great way of explaining it. So can you walk us through what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Adrian. The risk consistency rule is always about ensuring that you manage your risk in a disciplined, consistent manner and limit the risk per trade to no more than 2% of your initial account balance. This is really important because it's prevent last swing in your equity and help mitigate the risk of significant losses due to the sudden market movement or unexpected event. Let's break it down a little more. The maximum risk per trade idea. You shouldn't risk more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in your potential exposure. Trade idea identification. Multiple trades on the same asset in the same direction are considered a single trade idea. On the other hand, trades on different assets or in opposite direction are treated as separate ideas. For example, if you open several positions on gold buy, they could count as one trade idea, and the combined risk must remain under 2%. And if you have a gold buy and GBP JPY sell, they treat as two separate ideas, each with their own 2% risk limit. Following these rules smooth out your credit curve, encourage disciplined trading, and more importantly, reduce the chance of the massive losses.
So thank you, Helen. That's definitely up to overviews. And now let me throw it back to the audience for a second. So traders, have any of you ever found it tricky to stick to the resistance rule? How does it feel to have those limits in place and just ever get in the way of your trading strategy?
Absolutely, Aiden. The main point to remember about the reconsistency rules are risk per trade idea. Stick to risking no more than 2% of your initial account balance on any single trade idea. This keeps potential losses manageable and ensure you don't risk too much on any one trade. A single trade idea. If you open multiple trades on the same asset in the same direction, they count as one trade idea, so your combined risk must stay within that 2%. Separate trade idea. Trade on the different asset or in different directions are considered separate ideas. Each of these can have its own 2% risk, but be mindful to keep track of them. And why does this matter? It stabilizes your equity curve by preventing huge swing in your account balance. It's promotes resilience by encouraging traders to think more carefully about their risk, and more importantly, it reduces the risk of major losses that can really hurt your overall performance. So, in short, adhering to this rule helps keep your trading account safer and support long-term success.
So, great, Helen. Now, I know some of you might be wondering how to make sure that you are actually sticking to this rule. So let's shift gears and get into some practical strategies for making it easier to follow. Matthew, could you share a few tips on how traders can stay disciplined and avoid breaking the risk consistency rule?
Of course, Alan, sticking to the risk consistency rule takes some planning and discipline, but it's totally doable with the right strategy in place. Here are a few key tips. First and foremost, clearly set your maximum risk per trade area to stay within the 2% limit. You can use risk management tools or calculators to help with this. Most platforms have built-in tools that allow you to automate risk limits.
So that's a really good point. Having the automation takes a lot of the pressures away. Now you need to constantly double check your platform does the heavy lifting.
Exactly. It makes it so much easier to stick to your risk limit when the platform is handling the numbers for you. It's also important to keep track of the total risk across multiple trades on the same asset. For instance, if you have opened several positions on gold buy, make sure the combined risk on those trades doesn't exceed 2%. This is where traders sometimes slip up. They open multiple positions without realizing that combined they are risking more than they intended.
So even though the trades are technically separate, if they're on the same assets, you've got to look at them as one entity, right?
Exactly, Aiden. Treat them as one idea because they are exposed to the same market movements. Speaking of different trades, it's equally important to treat trades on different assets or in opposite directions as separate ideas. This way you can manage each trade risk with individual without exceeding the 2% rule on any single trade.
So you could be running a gold buy and a cheap P1 sells at the same time without violating a rule, as long as you manage risk for each one separately.
Exactly, just make sure you keep an eye on the risk for each idea individually. I also recommend using risk management features that many trading platforms offers, like automatic position sizing or stop loss orders. These tools can help control your exposures and prevent you from overextending your risk.
And I imagine these tools really help prevent those moments when you're tempted to take on too much risk in the heat of the moment, right?
Absolutely, it takes the emotion out of the equations and help you stay disciplined. Lastly, make it a habit to regularly review your trading ability. This is sometimes a lot of traders neglect. Reviewing your trades help ensure that your risk volatility remain within the set limits. And if you notice any patterns or areas where you are taking on too much risk, you can adjust your strategy to stay compliant.
It sounds like regular check-ins are crucial to spotting potential issues before it becomes bigger problems.
Exactly, Alan. It's all about staying proactive.
So, great tips, Ralph. So I think that covers it, and let's make sure that we are applying these risk management strategy and taking advantage of the new options available for account management. Thank you, Alan and Ralph, for your insight. So our vision is to foster a farming communities of elite professional traders, positioning WeMasterTrade.com as a go-to platform for anyone serious about advancing their career. Whether you're just getting started or have user experience under your belt, we are committed to provide opportunities and resources that help you succeed at every stage of your trading journey. At WeMasterTrade, we understand that there's no one-size-fits-all in trading. We understand that each trader's needs are different, and we're here to support you with the tools, insights, and the packages that cater specific to your trading goal. And if you're ready to take your trading to the next level, you definitely want to stick around to hear about the exciting offer we've got lined up. So, for traders looking to ways to keep more of their profit, well, today we have an exciting update that will increase your earning without changing your trading style. It's all about boosting your profit split by simply choosing the right funding package, and Rob will help break it out for you.
This new update is something that every trader would know about, the extra profit sharing. When you put in the effort to grow your account, wouldn't it be amazing to actually keep more of what you've earned? Well, now this is new profit sharing boost. That's exactly what happened.
Actually, Rob, I know that's one of the most common frustration in trading is feeling like your hard work isn't rewarded enough. But now with the bonus profit sharing feature, you can actually increase the percentage of profit you keep. It's a total game changer.
Alright, so get straight into the details. So here's how you can boost your profit split and earn more. So when you invest in an instant funding package over $170, you get an extra percent in bonus profit sharing, and over $350 you get 3% bonus in profit sharing, and for packages over $500 you get 5% plus in bonus profit sharing. So Rob, can you help break this down in a real example?
Of course, let's take a look at a $500 funding package. Normally with instant funding you start with a 50% profit share, meaning that for every $1,000 in profit you make, you would get $500. But with this new promotion, when you choose a package over $500, your profit share jumps from 50% to 55%. That means instead of taking home $500 from the $1,000 profit, you now keep $550. And while that might seem like a small change at first, think about how much that adds up over time, especially for consistent traders. So in short, the bigger the package, the bigger your profit share boost.
Exactly, Rap and trader. Here why it is a smart move. Let's say you're someone who trade consistently and make the 5,000 in profit over time with a standard 50% profit share. You walk away with the 2,500, but with the 55% put, you keep net keep the 2,750. That's an extra the 250 in your pocket for simply choosing the right pockets. And the best part, we try for required. You don't have to change your strategy or take unnecessary risk. All you need to do is select a higher funding pocket and you will instantly start earning more from the same trades.
So now some of you might be wondering why is it so frustrating? So let's play on that from this.
Great question, Simon. As traders, our goal is always to maximize return while minimizing risk. The best way to grow your account is to keep reinvesting your profits. But that's only possible if you are getting a bigger share of what you earn. With a higher profit sharing, you can scale up faster, compound your earnings, and have more capital to work with for your next trades. Think about it, if you are keeping a larger percentage of your profits, you have more flexibility to diversify your trades, try new strategies, and even withdraw more funds. This is especially important for those who want to trade for long term. Over time, these small percentage increases add up to thousands of extra dollars. So if you are someone who takes trading seriously, this is a huge opportunity to level up your earnings.
That's an important point, Rob. And from a psychological perspective, knowing that you're earning more per trade can actually help you stay disciplined and focused. Instead of overtrading or taking unnecessary risk to hit bigger profit, you can trade smarter because you already keep a bigger share of what you make. Plus, this isn't just about individuals' benefit. The more trade take advantage of this offer, the stronger our trading community becomes. More capital means better trading conditions, more opportunity, and stronger ecosystem for everyone.
So overall traders, you've heard it from the expert. The next part that the was sharing is your chance to increase your earning without changing your trading style. All you need to do is to choose the right funding package and you'll instantly boost your profit split. Visit WeMasterTrade.com now and grab your instant funding package.
Guys, this is an opportunity you don't want to miss. The market is all about making smart decisions, and this is one of the easiest ways to maximize your return. If you're serious about your trading journey, this is a no-brainer. Don't wait too long because opportunities like this don't come every day.
Alright trading, so let's talk about one of the hottest offers available right now, the WeMasterTrade Burger event. So this isn't just a discount or a little pack, it's a game changer for traders looking to scale their accounts with zero to extra cost. So Helen, can you break it down for us?
Absolutely, Aiden. The BOGO event or Buy One Get One is one of our most generous promotions today. Here's how it works. When you buy a package at 175 account or higher, you will get free account 10,000 instant account. When you buy a package at 340 account or higher, you will get a free account of 25,000 instant account. And when you buy a package at 650 account or higher, you will get free account at 50,000 instant account. So essentially, when you purchase eligible instant funding packet, you're doubling your trading asset without spending an extra cent.
And let's be real, that second account can do so much for you. Maybe you want to try different strategies. Maybe you want to split your trades between conservative and aggressive setups. Or maybe you just want a safety net in case one of your accounts is drawn out. Either way, you now have more capital, more flexibility, and more opportunities.
I love that, and this isn't a promo that makes you jump through hoops, right? The borrow account is going to be issued after qualifying purchase. Is that right, Helen?
That's right. When you purchase a confirm, your system automatically issue your bonus account. No hidden step, no waiting period. It's quick, seamless, and incredible trader planning.
And here's the cool part, WeMasterTrade allows you to combine BOGO account up to $200,000 in total funded capital. That means if you're a serious trader looking to scale, you can stack this account to trade even larger.
Okay, that's huge, but now let's talk terms. So there's a few rules to keep things fair and balanced, right?
Right, so here's what you need to know. Each BOGO account allows one payout. After you claim your first profit, that account is complete. Only one active BOGO promotion per traders at a time. Once you complete your BOGO phase, you are eligible for a new one. And lastly, BOGO account must adhere to the same trading rules as standard instant funding accounts. That means there is no maximum loss limit and profit target still applied.
So how do you make up the most of it? Well, you could use your main account for your try and two strategy and the BOGO account to experiment with something new. Try gold scalping, new breakdown trading, or running an EA on one and manual trading on the other. You got the option, then that's what this promotion is all about.
You can also use it to compare your emotional trading on one account with a more rule-based approach on the other. This creates a controlled environment for skill development. It's ideal for traders who are looking to become more consistent and test risk model under real-time funding conditions.
So to recap, with the BOGO event, you get an additional funding account for free instantly with the potential to scale all the way to 200,000K. So you diversify, test straight markets and profit more. Oh, why WeMasterTrade cover the risk?
And if you're just starting out, it's the perfect way to get two chances to succeed instead of one. You get to refine your discipline, test consistency, and understand the platform better, with twice the experience and zero additional cost.
Exactly, we decided to BOGO promote with the growth in mind, not just profits but development. It's a tool for building skills, scouting account, and increasing opportunity for every kind of trader.
So, and remember the BOGO event is only available for a limited time, so don't miss the window to multiply your opportunities, whether you're trading full-time or still learning the ropes. This is an offer that lets you move forward with confidence. So let's now take a closer look at today's global economic indicators and their potential impact on the market, from the US, New Zealand to Japan, Australia, and this is on to hit your comprehensive macro update.
So, here's the event for May the 6th. For the on-day event, the Japan bank holiday, the impact is low. And about its effect, liquidity during the Tokyo sessions, particularly in GBY crosses. The cautious trading GBY pairs low volume and amplify volatility. At 8 a.m. and ANZ commodity price. For the interpretations, commodity prices stabilize after real supply, signaling no external demand, important for New Zealand to its export reliant economy, which are dairy, meat, and wood. For the market impact, for first the NZD stable, but watch net GDT auction for confirmation. For the economists, price stability in export eases inflation worries but doesn't revive growth. And for investors and traders, commodity in both equity remains sideways unless prices rebound. At 8:30 a.m., bearing approval. For the interpretation, sharp drop indicate housing construction cooling sharply, potential drag on GDP, reflect higher borrowing costs or declining demand. For the market impact, first AUD Paris signal growth softening, nesting is real estate, construction stock, downside risk, and the last one, economists, potential RBA dovish till if trend persists. At 8:45 a.m., Tyson Services PMI. The services sector is barely expanding, lower than expected data show cooling momentum. Tyson's BMI is private sector focused, so it reflects SME performance for the market impact. CNY bearish bias, commodities, copper, iron may face pressures if Chinese demand outlook weakens. For the global risk appetite, slight drag if China growth fears surface. At 12:45 p.m., unemployment rate. For the interpretations, job market remains stable, no immediate policy shift signal. For the market impact, CHF neutral. Economists' employment strength confirm underlying Swiss economic resilience. At 1:45 p.m., industrial production. Slight miss rebound is losing steam, implying weak manufacturing recovery. For market impacts, euro slight downside bias if paired with other weak euro data. For French equities, industrial could be pressures, and for economists, production stalling will lower GDP expectations. At 2 p.m., Spanish unemployment change. For the interpretation, huge improvement, unexpected sharp drop in unemployment, possibly seasonal or tourism linked. For the market impact, euro bullish bias, just positive for risk sentiment in periphery eurozone. Economists could revise Spanish Q2 growth outlook upward. At 2:15 p.m., Spanish services PMI. Still in expansion territories but decelerating, slightly soft but no recession signal. For market impacts, euro slightly bearish if viewed alongside soft French data. Economists watch for continued trend in next month's PMI. And Helen, please help me with the next events.
Okay, right. For the next event at 2:35 p.m., NSB Chairman will speak. The impact on medium. The market may react if he signal concern about the CAF strength or policy rate path. Market impact. CAF can move quickly in harvest and dovish coup. Trader important for rate path guidance, water and inflation mentioned. For the next event at 2:45 p.m., Italian service PMI. Slightly for the interpretation, slightly weaker but still expanding. Not a major concern unless paired with the industrial decline. The market impact, EUR neutral is slightly bearish. In better, the little actionable signal unless trend worsen. For the at the 2:50 p.m. spread 5 on service PMI. Or the PMI below the 50 is the spread in Italy equal the contraction in service and bad side for GDP. For the market impact, EUR and GDP and negative. The bond bullish with growth equal to rate cut rate. Investor trader should focus on defensive asset in EU and UK. The next event at 4 p.m. Eurozone PPI. For the interpretation, major drop in real price equal the disinflation pressure or deflation in supply chain. This support the ECB rate concern. For the market's impact, EU are bearish on the yield front, economic and deflationary red flag, ECB under pressure. The next event at the 7:30 p.m. trades balance. For the interpretation, the devices that they are equal to neutral signal. The major macro shift in trade trend on the market impact CAD neutral. Investor was oil price more closely for Canada outlook. The next event at the 7:30 p.m. For the massive winding up devices equal sharp churning import on decline in import. Goods subtract significantly from the GDP if it continue. For the market impact, US data bearish, equity exporter under pressure. Economic will revise GDP lower the system. The next event at 9 p.m. EV PMI. For the interpretation, in line with stable Canadian business activity, impact the C stable. Investor the no new info. Risk appetite remained driven by our BOC expectation. The next event is tentative RCM TTP optimism. For the interpretation, optimism rose above the 50, slight increase in consumer confidence. Positive acceptance, but low impact data release. For the market's impact, US data slightly supported. Economic reforms reinforces resilience in consumer outlook. The next event is the GDP price index that previous at 1.6%. No new data yet. Key for New Zealand direction, sharp right or front could signal term of the trade shift. That's our news for today.
Okay, so some of your clients are reporting me that they don't know how to navigate in our web page. So, Ralph.
Alright, let's get back to my screen. Here is the main website of the WeMasterTrade website. On the upper bar, we can see some sections such as the instant funding, testimonial, promotions, affiliate, about us, payout, and the language sections. First of all, let me explain about instant funding. In this part, there are two things. First is the challenge, which leads you to the challenge package. Here you can see a table which describes the full details of the challenge package, including the prices, the capital, and the phases. In the challenge package, there are three phases. The first one, the second phase, and the last one is the funding phases. And in the instant sections, it will lead you to the instant account type, such as we have the standards, the 510, 510 OBC, or 510-0. And if you want to know more about the details of the package, you can get to the comparisons page here. In this one, you can see on the information of each package, including the fund, the initial balance, the scale plan, and all the rules such as the daily loss, the maximum loss, or profit target. If you are wondering about the commissions, it is also stated in the comparison table, such as the forex is $4 per lot, and stock is $0.07 per lot. About the trading leverage, for forex account it will be 1/100, and stock is 1/20. And the next one is the testimonial. In this one, you can see on the sharing from our customer and the document or the certificate they shared on our website or our community. And for the promotion page, in this one you can see on the available promotions that we offer at the moment. First of all, the most popular one is the buy one get one or the BOGO. In this one, you will have to buy a package with the fees of at least $175, and you will receive a BOGO account for free, of course. And at the moment, our instant program is applied with this promotion, the free swap program, which means there is no extra charges when you hold positions overnight. And the starting of the promotion is on 24 March. And please remember, this program is only applied to on instant accounts, not including the challenge ones. Alongside with the BOGO account, we have the promotion of extra profit sharing. When you buy the account of the free of at least $175, you will receive a bonus profit sharing and up to 5% depending on the fee of your instant package. And the last one is the discount code, 20% discount code for the 5-10 package. When you buy a 5-10 package, you can use the code, say 5-10, to receive the 20% off for your package. Next up is the affiliate page. Here you can register to join in our affiliate partner program and earn up to 50% of the commissions from your customers when they buy an account. So here is the description of this program. About the commission structure, it is a 3-level dips, and let's look through this how it works. For the level 1, you will earn 50% commissions on the payment value generated by trader you directly refer. On level 2, you will earn 10% of the commission earned by your direct sub-partners. And the last one, on level 3, you will continue to earn 1% from the commission generated by sub-partner of level 2. If you want to know more about our platforms such as WeMasterTrade or WeCopyTrade, you can look through this About Us sections. About WeMasterTrade, we are a platform that provides virtual funding account, and for WeCopyTrade, it is a platform that allows traders to copy trades from other accounts, and also we provide academic sections. In this one, you can see we have provided some certificate from AICs. Also, you can see some certifications that our platform have been granted throughout our journeys. And for traders who want to know more about the payout process or the payout from other customers, you can access the payout sections here, and you can see our customer attend in the interview before the payout, and they share their trading journeys as well as their trading strategies here. Talking about the profit sharing structures, it will based on the number of payouts you have conducted. In the first payout, you will receive 50%. In the second payout, it will be 75%, and from the third payout, it will be 90%. And the payout structures, the profit sharing structure for the 5-10 NoBC package will be different. It will be based on the dialogue bridge. And for more information, you can find it in the FAQ. And the scale plan, this is our scale plan, and on the instant package can be scaled up to $1 million. when they meet some specific conditions. For example, if you want to access to the evaluation trader level 1, you have to conduct at least 2 payouts with a total profit of 20%, and another condition is to maintaining the profit consistency below 20%.
Okay, so thank you, Rob, for such a detailed guide through of our website, and thank you all for audience for joining us today. And we hope that this session has been informative and that as you are as excited about these opportunities at WeMasterTrade as we are. So remember to like, subscribe, and share this live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events, and we look forward to seeing you again soon. So until next time, happy trading.
Trade. WeMasterTrade.